Hello money magnets and master traders, it's your Uncle Charters, and we had a second bounce yesterday from the S&P 500. We went and back tested the 50 daily moving average. That's that orange line right there, and for some reason the bulls just couldn't break above it, but it was definitely a nice trading day nonetheless. I wrote in my general lean yesterday, I write this at 7:26 a.m. 660.7 is the equilibrium level for today. If above, a bigger bounce is possible, and below, more downside is possible. It's important for us to be ready for any case scenario, upside or to the downside. We want to be ready for it, and I used that 660.7 level as the equilibrium level, and I believe we could get a bigger bounce above it if we're above it, and I would have been bearish if we were below it. And I wrote here, if above and 662 or 663.5 clears, 665, 666, 669, and 671 will be back in play. You look on the 15-minute chart, because that's the time frame that I use intraday, and we can see what happened. We bounced around my 662 level, could not break below 660.7, so it was not bearish, and we cleared 663.5. We even cleared the next resistance level I had at 665, and it gave us this beautiful pop to the upside where it went and back tested the 50 daily moving average as of resistance. Amazing trading day. Volatility was still alive and well. We made hundreds of thousands of dollars in a day. It was incredible. But as incredible as yesterday was, we must get ready for the next trade setup, the next trading day. Now the question now is, now that we had the back test of the 50 daily moving average, will the bears finally step up and end this bounce, or will the bulls recapture the 50 daily moving average? I've been talking about the breakdown we had way back in February, and I want to remind us that when we broke down the 50 daily moving average back in February, we had a few back tests of that 50 daily moving average as resistant before pushing down, but overall there was selling pressure from that moving average. Fast forward to today, once again we had the back test as a resistant, and the bears stepped up where they needed to. Will there be bearish follow through? So this morning I'm going to give you guys my levels and setups and let you know what it's going to look like if we get a bull case scenario or a bear case scenario, how are we going to trade it. As you guys know, I use the 15-minute chart. When we break down a support level, you want to enter puts. When we break out a resistant level, you want to enter calls, and of course respect your stop loss. So now that the 50 DMA has hit, how do we know it truly rejected? When a resistance hits and it truly rejects, it should be strong enough to break down a support level. And the breakdown of a support level is how we know a bounce has ended. So we have to look at that 667 level. That 667 level is a fib level which we cleared yesterday. So if we truly reject from the 50 daily moving average, we need to break down 667 today. Not only will that be a rejection from an important moving average, but it would give SPY a false breakout setup, because we cleared 667 yesterday. So if we break back below, that would qualify as a false breakout setup. And false breakout setups are bearish. So if we break down 667 today, we can get a drop back to the downside, 665, 663.5, 662, and the critical one at 660.7. Why does Uncle give so many levels? Because the way I trade it level to level. So yesterday, me and my Discord members, we longed the breakout of 663.5. We took most profits around 665 and we left runners. And the runners will catch the rest of the move. There's always a chance if you're feeling good and it's looking good, you can always add to your runners to make your runners bigger and then, make more money as it goes up. But you don't have to. But that's the point of why I give many levels. So we play it level to level. And for the home run moves, we let our runners do the heavy lifting. So base hits and runners, baseball analogy. So if we break down 667, I gave you guys the target 665, 663.5, all the way down to 660.7 would be my target. And I will know a lower high is in when that 660.7 fib level breaks back below, because that is when I believe the bears will take back control of momentum. The bounce is over. Not only that, it would also get priced back below the 5 daily moving average, which in the short term would be very bearish. So that's the bear case scenario. The bull case scenario is that if above 667, then the bulls have a chance at a bigger bounce, but they will need to show follow through. And when I say follow through, I mean the trigger to enter calls. And the trigger to enter calls would be a breakout of 669 or 671. That's a fib level as well. The 50% fib level, which is very critical based on this inverted cup. So if those levels clear, we're likely getting a bounce, another $5 to $10 pop back to the upside. upside. You guys can see my trend line. Breakout of that down trend line would need a price above 681. So remember the levels, remember the setups. That's Uncle's trading principle. Know the levels, know the setups, and just trade it unbiased. Whether to the upside, to the downside, it doesn't matter. I let the market makers decide what they want to do. I just trade it. Moving on to QQQ, it came just a few cents shy of back testing the 50 daily moving average. It closed yesterday around 605-ish, and we can see that it's a little lower than that. It's gapping down a little bit. So to be bullish, I have resisted at 606 and 607.4. If those levels clear, then the bounce continue upwards and will likely pop up to 613. Above 613 would be pretty bullish. We break above this big red candle here, setting us up to 617, 618.7, and possibly 620 plus. There is a gap around that area. But if we are to trust a rejection from here, from that area yesterday, support levels must fail. I have support at 603, 601, and the critical fib level at 599.3. Those levels fail, we're likely dropping down a lot lower, 598, 595, and possibly all the way back down to 589. But like I said, don't trust the rejection unless it's strong enough to break support levels. Because if 606 and 607.4 clears, the bounce continues up. Here is Tesla. I was looking at that 399.7 level yesterday. I wrote it in the Discord. And I mentioned that above it, we would be bullish and below we would be bearish. I wrote it. Yeah, if a 399.7 is the equilibrium level today. If above, look to long. If 399.7 failed to support, then we look to short. And you can see what happened. Longing above 399.7 worked really well. And we even recaptured the 414 level. That was an important pivot level all the way back in late October. We failed to recapture that level multiple times until yesterday happened. So 414 will be today's equilibrium level. As long as above, expect more upside, $10 to $20 pop back to the upside, and that is not an exaggeration because Tesla is super volatile. But if you are looking to short, you want to see 414 and 412 fail as support. Those two levels fail as support, you're good to go on puts. Should be a nice drop back to the downside, $15 to $20 drop back below. NVDA went for a bounce. I was watching the 178.8 level as an equilibrium level, and it gave us a nice bounce, but as you guys can see this morning, it's gapping down. This is why Uncle loves level trading and prefer day trading over swinging, because you just never know what's going to happen overnight. So yesterday's move was good for day trading, but with this gap down, wouldn't be good for swing trading. So now we must adapt. And from where it's at is around 175. So the next support level right now is at 174. If 174 fails today, 172 or 170.8 will be in play, and below 170.8, Uncle Charters will be bear biased, and I will be looking to short the crap out of this ticker symbol. If you want to get bullish, we must pop back up to the upside. Resistance is at 175.5, 177, and 178.8. If those levels can recapture, we can pop back up to 183.5 or even higher this time, maybe up to 187. Here is Amazon also going for the bounce. The level I would like for you guys to watch today is at 225 and 224 and 222.7. Those are support levels. If those levels break down, 226, 224, and 222.7, we're bearish. Enter puts. We're likely to drop another $10 or higher. Around this $7 to $10 move back to the downside. But if we're above 226 and the next resistant level at 227.5 and 229 clears, that's bullish follow through, go long. 230.4, 232, 235, and 236.5 would be my targets back to the upside. And Meta going for a beautiful bounce. It bounced off my 5 daily moving average yesterday. Can Meta go retest the 20 daily moving average? Well, they'll need to go through some fib levels first. It's around 612 right now. That's actually one of my levels. But if we're above 612, the next resistant level is at 614 and 618. If those levels clear, we're likely popping another $10 to $13 to the upside. But if we want to get bearish, we need to get below 612, break down 610, break down 608.4. That's a fib level. If those levels fail, you go short. We're likely dropping another $9 to $10 below. Maybe even go back and hit the 600 level. Microsoft, well, we bounced around the 200 daily moving average once again. Didn't quite hit it, but around that area is showing buying pressure. But despite the buying pressure, it's not leading to much upside. And for me to favor more upside, I need to see resistance at 473.5, 475, and 476.5 clear. Those levels must clear. There's selling pressure up there. So if it clears, we're likely popping back above 480. But for me to truly trust the rejection, 470, 468.5, and 467 must break down. Below 467, I would be extremely bearish on Microsoft because we're likely losing that 200 daily moving average, and there's no such thing as a bull market, a bull trend, or a bullish ticker symbol that is trading below the 200 daily moving average. Here's Apple looking bullish, showing a bit of follow through from last Friday's bounce. 276 and 277.4 are still the resistant level, and to keep the bounce going, those are the levels that must clear to send us to 280 and 282 area. If it's time to drop back to the downside, 274, 272.5, 271, and 269.5 are my support levels. Below 269.5, I would once again switch back to being bearish and will likely drop another $5 to $8. Here is IWM back testing that 20 daily moving average. Incredible. To keep the bounce going, IWM must clear 240.8. That will recapture a fib level, but also get price above the 20 daily moving average, and that would give me enough reasons to be bullish. 242, 243.5, and 245 plus would be my targets. Now that is a resistant level, the 20 daily moving average. It is a resistant level, and we don't trust rejections from resistant levels unless it breaks down support. 239 and 237.5 are those support levels. If those levels fail, that is when you want to enter puts and bet to the downside with 234 or much lower in play. Here is the VIX. VIX is still above the 20. It's still above the 200 daily moving average. It's been pulling back. We'll see what happens. We don't want to see the VIX dropping too low. We want there to be volatility. So to bounce, 20.7 and 22.3 must recapture. We lost those levels yesterday. If those levels recapture, it's bounce time for the VIX, and it's likely drop time for the SPY. However, below 20.7 keeps 19.7 in play. That's around where the 200 daily moving average is. If 19.7 fails, we're likely going to drop back down to 1850-ish area to retest the 50 daily moving average. And of course, before I let you go, I got to show you guys the DarkPool level. Nothing over $1 billion. It's not really what Uncle likes to see, but we had one that was at 658.86, over 500 million in premium. But the more important one I'd say is 669. We had one order that was over 200 million, another order that was over 400 million. Not quite at $1 billion, but 669 is one of my levels. So I love to see when DarkPool levels mashes up with one of my fib levels or one of my buy support resistant levels. So 669 is the main level I'm watching. Above it, we can definitely favor more upside, but below it, there's a good chance we're going to pull back. Guys, thank you so much for spending time with Uncle this morning. I hope you found value in this video. If you want more content from Uncle Charters, join Uncle's Discord. We are making lots of money. We are money magnets. Come join the family. Let's be money magnets together, and let's kick the market makers' ass. Peace.